Everybody and welcome. I'm Terry Ryder, founder of hotspotting.com.au. I've decided to do a special webinar on Brisbane because I believe the city's property market is about to realise the potential that many people have seen in it over the past 2 or 3 years. It's puzzled many property observers in recent years that Brisbane's been so quiet. Many have predicted a Brisbane boom, but it hasn't happened until now. But now Brisbane's time to shine has arrived, I believe. Sales activity has soared in the past 6 months and prices are starting to show significant uplift. And this dramatic change in the Brisbane market from dormant to dynamic is happening for clearly identifiable reasons. All the drivers that propel property markets forwards are now in alignment, and Brisbane is now one of the nation's most compelling markets. So for the next 20 or 30 minutes, I'm going to explain why I believe so. And then I'd like to deal with your questions. And if you do have questions about the Brisbane market, about real estate, generally, could you please type your questions into the chat box or the Q&A panel that you should be able to see in front of you. And after I get through the slide presentation, I'll deal with your questions. So, yeah, to begin with, perhaps I'll just set the national scene, the context in which the Brisbane market sits, and there's no doubt that a national real estate boom is underway. And the first thing to say about that is genuine nationwide property booms are very rare occurrences in Australia. The last time we had one was from 2001 to 2004. It's the last time that all the major markets across the nation were showing significant, say, double-digit annual growth for multiple years. And that's what we call a national property boom. So that was the last one, almost 20 years ago. And prior to that, it was the late 1980s when there was a quite prolific property boom for 2 or 3 years at the end of the 1980s, despite extremely high and rising interest rates. So about 6 months ago, we made our forecast for 2021 at Hotspotting, and what we forecast was, yes, a nationwide property boom. We observed that in many locations, the boom was already well underway, particularly in regional Australia, and we felt that the boom that was coming to Australia was going to be substantial. We believed it was going to have longevity, and it was going to be led by good regional markets and the smaller capital cities, and I think what we're now seeing very much bears out that forecast. So, according to the latest data that's coming through from the various sources, including the latest data from CoreLogic, prices are rising almost everywhere. What we have on the screen right now is the past 12 months, the 12 months to the beginning of this month. And you can see from the figures on the screen that all the capital cities except Melbourne are up in annual terms. Melbourne is actually now showing good growth. I'll show you the latest quarterly figures shortly, but in annual terms, Melbourne's still down a little bit, but everywhere else is up. Hobart, Darwin and Canberra have risen in double digits. But as you've probably been hearing and reading through mainstream media, the upcycle has been very much led by regional Australia, and you can see from the figures on the right-hand side of the screen, regional New South Wales, regional South Australia. It might surprise some people. It doesn't get talked about almost at all in media, but it's been showing nation-leading uplift in the last year or so, and continues to be to show good growth. Regional Tasmania has been for the past 2 or 3 years. Hobart and Tasmania has been right at the forefront of price growth in Australian. Regional Tasmania is still one of the strongest markets in terms of price uplift in the last 12 months. Regional Western Australia is the only regional market that in annual terms is lagging. But if we look at the most recent, so go back one slide, the most recent data from CoreLogic for the latest quarter, the 3 months to the end of February, beginning of March, and we can see that every market jurisdiction in Australia has not only had growth in their median house prices, but substantial growth. And in some cases, the quarterly growth is actually more than the annual growth. And that's certainly true for Melbourne. The annual term is still down a little bit, but the latest quarter is really showing substantial growth. If you annualise those quarterly growth figures, you're starting to see in pretty much every market jurisdiction in Australia, all the capital cities, all the state and territory regional markets. If we annualise those quarterly growth figures, we're talking about double-digit growth in property prices, and in some cases more than 20%. That's not to say that that level of growth is going to continue right throughout the year, but certainly based on the last quarter, the figures from CoreLogic, also supported by data was out in the last week from the Australian Bureau of Statistics. Their figures were for the December quarter, but very, very similar numbers to what we're seeing on the screen, the figures for the 3 months to the beginning of March from CoreLogic. Rents are also rising, and this is part of the gathering momentum of property markets. I'll talk in a little while about the factors I think that are driving this, but I think there are multiple factors. It's not about record low interest rates. It's just one of 14 or 15 factors that I have on my list of reasons why Australia is now in the midst of a substantial nationwide property boom. Low vacancies and rising rents is part of that momentum. The figures from Domain to the end of last year show that in most capital cities there's been meaningful growth in residential rents, particularly in Perth and Darwin, and in particular in regional Australia. And on the screen on the right-hand side of the screen, just some examples of the substantial growth in rents that have been experienced in regional centres in Queensland, in Victoria, in New South Wales and elsewhere. In some cases, growth in rentals of more than 20%, which is extremely rare, but it's a factor of what we'll see in this slide, very, very low vacancies. One of the realities of property markets in Australia is that Sydney and Melbourne are often characterised as the nation. What's happening in the two biggest cities is often characterised in mainstream media as being Australia. If Sydney and Melbourne are booming, they'll talk about a national property boom. If Sydney and Melbourne prices are falling, they'll talk about a national property downturn. But the reality is very often Sydney and Melbourne aren't the rule, they're the exception to the rule. And that's certainly the case with a number of factors with real estate at the moment, particularly vacancy rates. So you can see on the screen on the left-hand side, the capital city, the latest vacancy rate figures from SQM research, and they show that Sydney is a little bit above that 3% threshold. 3% considered to be kind of a balanced market. Below 3%, you're starting to tend towards a shortage of rental properties. Above 3%, you're tending towards an oversupply. Melbourne's still 4.5% too high. A lot of that high vacancy is in the inner city suburbs, the CBDs of those two big cities, and the inner city suburbs that are near the CBDs. Elsewhere, it's a story of not only low vacancy rates, but ultra low vacancy rates, amongst the lowest that I've ever seen in my time in real estate, which goes back almost 40 years. 5 of our 8 capital cities have got vacancy rates below 1%. Brisbane's a little bit higher, but only marginally so at 1.5%. And then we have on the right-hand side of the slide, you can see a sample of regional areas, regional cities and towns in Queensland, Tasmania, South Australia, New South Wales, and Victoria. And you can see that most, and these are representative. I haven't cherry-picked the most spectacular examples. I could show dozens of examples, and you'd be seeing similar figures. Most regional centres in Australia have vacancy rates below 1%, and some are closer to 0 than to 1%, which means that there's almost nothing available for rent, and that's putting tremendous upward pressure on rentals. And I think as we go further into 2021, particularly with the lifting of some of the moratoriums that some of the states have had in place on lifting rentals as a consequence of the virus crisis, the lockdown periods, as those moratoriums are lifted, and leases are renewed, we're going to be seeing some substantial uplift in rentals in many of these places, and it's already happening. So this is a factor for prices. You can't have a location with a vacancy rate close to 0 and rents rising strongly without prices also reacting to that. So we see what's happening with vacancy rates and rentals is a very good forward indicator of what's likely to happen with prices. So now let's turn out against that background of what's happening nationally. Prices rising, particularly in the most recent quarter in all market jurisdictions in Australia, and very strongly. Low vacancies almost everywhere, with inner city Sydney and inner city Melbourne as the exceptions, and rents rising in many jurisdictions as well. Against that national background, let's turn our attention to what's happening with Brisbane and why we think that it's become one of the most compelling markets for investors to consider in all of Australia. But by way of background, Brisbane has been predicted by many pundits over, say, the last 3 years to be the market in Australia. And you can see on the screen some of the headlines that have occurred in early 2018, early 2019, early 2020. A lot of people were predicting that this was the year for Brisbane. Brisbane was going to be nation-leading price growth. It was going to be the strongest capital city. It was going to be the highest growth. Many of the bank economists have predicted that, and so have many other forecasters and commentators. But Brisbane, up to this point, hasn't delivered. And it's got to the point where I think perhaps investors are getting a little bit tired of hearing about Brisbane, because they've been told for the last 2 or 3 years that Brisbane is going to have a boom, and it has not delivered. But that's up to this point. I think we can now confidently say that Brisbane's time to shine has arrived, and the Brisbane boom is not only about to happen, it's already happening. Let's look at some of the evidence. Yes, Brisbane's time to shine has arrived at last. The latest price data, firstly, the ABS, which is always a little bit behind with its publication of price data. It's just published its figures for the December quarter, and it shows considerable price uplift in Brisbane. This is the median house price for Brisbane is up 2.9%, almost 3% in the December quarter, and for calendar 2020, almost 5%. It's the beginnings, I think, of a substantial uplift in prices in Brisbane. We should see some individual examples of prices already rising in large numbers in Brisbane. CoreLogic's latest figures to the end of February showed that in the month of February, Brisbane's median house price rose 1.6%, and the 3 months to the end of February was up 3.8%, and over the last 12 months, almost 6%. But based on the monthly figure for February and the quarterly figure to the end of February, Brisbane is just beginning to deliver very strong price growth. So I think that annual price figure, which is currently sitting at around 6%, is going to become stronger and larger as we go throughout 2021 and probably also into 2022. Units are also overall, unit prices starting to rise, not as strongly as for houses. The unit market, particularly the inner city market, is still hampered by the last remnants of the oversupply that has existed for the last couple of years, and vacancy is still a little bit high in the CBD and near city suburbs. We'll look at that in a little while, but nevertheless, according to both the ABS figures and the CoreLogic figures, we're now starting to see uplift in median apartment prices for Brisbane. Not in large numbers, but in February, 1%, the February quarter, almost 2%. So we're starting to see a recovery in apartment prices in Brisbane. Just looking at the vacancy rates, one of the things holding Brisbane back in recent years has been that perception that there was an oversupply of apartments, and I think that's certainly been valid. But you can see from the data on the screen that there's been a big improvement in vacancy rates in those inner city postcodes. The CBD down the bottom there was about a year ago, it was 13%. It's still too high at 8.5%, but it's improved a lot and it's trending in the right direction. It's also true for neighbouring Fortitude Valley postcode 4006, which also covers Newstead and Bowen Hills. Almost 7% a year ago, now down to 4.5%. So trending in the right direction. And some of those other postcodes, Albion was almost 5% a year ago. Now it's close to 2%. The Hamilton postcodes dropped from 3% to half that level, and similar for New Farm, one of the prime inner city suburbs of Brisbane, postcode 4005, was 3.5% almost a year ago, now 1.5%. So you can see that those inner city vacancy rates are trending in the right direction. Still some concerns about the CBD, but that drag that had been on the Brisbane market in recent years is starting to diminish. The supply of available apartments for sale has diminished, and vacancies in the inner city are starting to get smaller. And that's a significant factor for Brisbane, although not the biggest, but one to keep in mind. Now, I'd like to talk for a few minutes about the Price Predictor Index. This is a quarterly report that we publish. And for the Price Predictor Index, we examine sales volumes. We regard the patterns with the number of sales that are happening in markets across Australia as a good forward indicator of what's going to happen with prices. So if you've got a pattern of sales activity rising, the number of houses and apartments being sold in a suburb or a town is rising steadily quarter by quarter, price growth almost certainly will follow. And it also works in the other direction as well, of course. If the pattern is downward, then price growth will halt, and in some cases prices will fall as a basis of a decline in the number of sales that are happening in a market. So every 3 months, I'll look at the quarterly sales volumes figures for every town and suburb in the country. There's just over 10,000 of them. So it's a very big task. And what we've just published the results of that latest analysis, the autumn 2021 edition of the Price Predictor Index. It's now on the Hotspotting website as of today, and it's going to be, we'll be marketing that over the next few weeks. But the figures that are revealed by this analysis are quite startling. Right across the country, many market jurisdictions, many of the capital cities, many of the state regional markets have got record numbers. What we look for is how many locations have got rising sales activity in each local government area, for example. And then we look for the patterns there, because that gives us some guidance as to the areas that are most likely to be showing good price growth in the near future. Now, the numbers for Brisbane are particularly impressive, numbers the like of which I haven't seen before. We've been doing this quarterly surveys for the past 6 years, and the current figures for Brisbane are the strongest in those 6 years. As it says on the screen, the uplift in sales activity in the past 6 months in particular in Brisbane has been extraordinary. The number of growth markets, the number of suburbs with rising sales activity in the greater Brisbane area has quadrupled since mid-2020. So you can see the numbers there on the screen. 9 months ago when we did our quarterly survey, we could only find 28 suburbs in the greater Brisbane area that had rising sales activity. And 3 months ago when we did another quarterly survey, we had 56. So there'd been a doubling in 6 months. But 3 months on, the latest analysis, there's been a further doubling, more than doubling, in fact. So the number of growth suburbs in the greater Brisbane area has quadrupled in the space of 9 months based on those figures. So we now have across Brisbane 124 suburbs that have got that upwardly mobile pattern of rising sales activity. And that's certainly the best result at any time in the last 6 years that we've been doing these quarterly surveys of sales activity as a forward indicator of what's going to happen with prices. That's one of a number of reasons why we're very confident this is going to be a very, very big year for Brisbane. The sort of price growth that Brisbane has not had any time in the last 10 years. So just recalling that, of course, many of you will be aware that from about 2013 to roughly 2017, Sydney and Melbourne had substantial price booms, but that boom was certainly not national. It was very much confined to the two biggest cities. Brisbane didn't have that kind of uplift. It just chugged along, pretty much a stagnant market throughout that. And the reasons why those two biggest cities had those substantial booms, and other cities like Brisbane and Adelaide, Perth and Darwin, etc., didn't have property booms at this time, which I'll talk about as we work our way through the presentation. But just segmenting the greater Brisbane area in terms of where the greatest number of suburbs are showing that up, with the Moreton Bay region in the far north, that's the The outer ring suburbs in the north of the Brisbane metropolitan area, the Moreton Bay region local government area, is the strongest. It very often is a leader for Brisbane, and it certainly is right now. 31 suburbs there. That's almost all the suburbs in the Moreton Bay region are showing that uplift. Logan City, the equivalent in the south, is also improving. It's been a market that's been in the doldrums for many years, and it's disappointed many investors who bought there perhaps 6 or 8 years ago and hasn't seen much in the way of price growth. But I think those who have held onto their properties there will finally be rewarded this year and perhaps next year, because Logan City is certainly showing big uplift. There's a lot of demand coming into that market. Now, Brisbane City Council area, it's a very, very big municipality. It covers a big chunk of the Brisbane metropolitan area. So we divide it into inner, north, south, east and west. The north segment is showing the greatest number of suburbs with uplift in prices, but it's spread right across the Brisbane metropolitan area. There's numerous suburbs in all segments with rising sales activity likely to lead the price growth, with the exception of Ipswich City in the far southwest. It's lagging at the moment. I expect it to catch up at some point in the next couple of years because it's got a lot in its favour. A lot of drivers why people would buy in Ipswich City, seek work in Ipswich City, many major jobs nodes, but to this point it's not showing the same uplift that we're seeing in other affordable parts of the Brisbane metropolitan area, like Moreton Bay region in the north and Logan City in the south. So as a consequence of that uplift, we're already seeing some substantial price growth. Now, one of the ways that I think real estate consumers are misled by what's published in media is the generalised data is what is published most of the time. So the latest figures from CoreLogic, for example, will tell us that Brisbane house prices have risen 5% in the last 12 months. It doesn't tell you the true story. They're always outperformers in any situation, any part of Australia, and that's certainly the case for Brisbane. So you can see on the screen, some suburbs have shown substantially more growth than that 5% average for the Brisbane metropolitan area, and some are above 20%. Now, I'm always the first to acknowledge that median price data can be rubbery figures, very dodgy data. You can't take it too literally, and the numbers jump around quite a bit. You can look at a location at one point in time and it's up 20% in annual terms, and you go back a few months later and it's down to 5%. How does that happen? Median price data is not perfect science. They're all rubbery figures to a certain extent. Nevertheless, this is what the data from CoreLogic shows up in the 12 months to the end of January. A couple of suburbs of Brisbane are up more than 30%. There are others that are up 20% with their median house prices in annual terms, and there are plenty that have shown double-digit growth as well. And it's spread quite across the Brisbane metropolitan area, not just the top end, but some of the middle ring and getting towards the lower end markets where median prices are down around 600,000. Some of those suburbs have also had already substantial growth over the past 12 months. But we're expecting to see more examples like that as we get further into 2021. Key trends for 2021. Why do we have this really strong national property boom? As I mentioned earlier, I've thought a lot about why we have this incredible momentum in our property markets. We keep being told almost on a daily basis by mainstream media that it's all about ultra low interest rates, and I think that's a very simplistic and basically erroneous analysis. We've had record low interest rates for years in Australia. Why have suddenly things changed? I think it's an accumulation of multiple factors. I have a list of influences that have driven the Australian property market, generally speaking, to this state of a national boom. There's 15 different reasons, including the economy being stronger than expected, unemployment's been much lower than expected, jobs are being created faster than expected. We've got a lot of government stimulus. There's a long list of reasons, some of them on screen. right now. First home buyer activity helped by government incentives has been a market driver. The fact that vacancies are so low and rents are rising in many parts of Australia is also putting upward pressure on prices. At the same time as buyer demand is rising, listings continue to be much lower than the market would like them to be. So there's more buyers than sellers, and that's putting upward pressure on prices. The fact that investors are now coming into the market in larger numbers, whereas in 2020 they were largely sitting on the fence, waiting to see what happened, and the prices were driven primarily by owner-occupiers, including first-home buyers. This exodus to affordable lifestyle, which I'll talk about in a little more detail, is a huge influence. And I think one of the reasons why the current national property boom has longevity and substance is because of the impact of infrastructure spending, which has been elevated and fast-tracked by government. I'll speak in more detail on that factor. Now, Brisbane is benefiting from most of those factors, which are national in nature. Brisbane's helped by the fact that it's had the virus well under control for most of the virus period, the last 12 months. First-home buyers have been active. It's a major beneficiary of this exodus to affordable lifestyle, whereby growing numbers of Australians are leaving the biggest cities and the inner cities and moving to the fringes or moving to the smaller cities or to the regions. And it's very much about lifestyle, and it's very much about affordability. Brisbane and Southeast Queensland generally is a big beneficiary of that. And we see that with the population data. Sydney and Melbourne are losing population to what we call internal migration, people moving to other parts of Australia, whereas Brisbane and Southeast Queensland are gaining big time from that. And that's obviously has an impact on demand in real estate. Vacancies are now very low in Brisbane, apart from the CBD and a couple of those near city suburbs I showed you earlier. The overall vacancy rate for Brisbane is 1.5%, and there's evidence of rents rising increasingly in various parts of Brisbane. It's also been targeted increasingly by investors. Some of the surveys from PIPA, Property Investment Professionals of Australia, indicate that when asked the question, which market are you most focused on, most likely to buy in the next 12 months, Brisbane is topping the poll. Now, the increase in spending on infrastructure is a major factor for Brisbane. When Sydney and Melbourne had that boom from 2013 to 2017, a key driver of that was massive spending on infrastructure. And that's one of the reasons, or the chief reason, why the boom happened there, but didn't happen in other places like Brisbane. Brisbane was at that point spending almost nothing on infrastructure. There were no major projects happening in Brisbane at that time. It just didn't have that impetus, that amazingly strong impetus that comes from spending on multi-billion-dollar infrastructure projects. So that factor has changed, and I'll show you some data shortly about that to emphasise just how important that is for Brisbane. And we have this other game changer that's just come into the mix very recently with the announcement that Brisbane is the preferred candidate to host the 2032 Olympics, and that's going to be influential. It'll be inevitably overstated by the property market in Brisbane and Queensland. You should listen to what the industry tells you about the impact of the Olympics with a certain amount of caution. We'll probably be told there's going to be a big boom after the Olympics. I think we're more likely to have an impact before the Olympics. It's the activity that will precede the Olympics that will drive real estate markets in Brisbane. We actually saw that with the 2018 Commonwealth Games on the Gold Coast, where it was forecast that there was going to be a substantial boom immediately after the Games, and that didn't happen. Well, we did see uplift in the market of the Gold Coast was in the years leading up to the Games, because there was such a big construction effort, infrastructure for the Games, other parts of the Gold Coast business community upgrading or expanding or building new things in anticipation of the Games, and that created so many jobs, new people coming into the Gold Coast, and that pumped up the property market. I think Brisbane's going to get a similar impact from the almost certainty that it's going to be hosting the Olympics in about 10 years' time. Yeah, I think this factor is there's a lot of debate about it in the media now, and there's disagreement about how significant. I think it is the single biggest force driving real estate trends so far this century. This drift of population from the biggest cities to the regions and the smaller cities has actually been underway for quite some time. It's not a response to the pandemic and the lockdowns. It's been underway for longer than that. Good, strong regional centres in Victoria been showing strong price growth as a result of this trend for the past 3 years. Places like Geelong and Ballarat in particular. Melbourne's been losing population to internal migration for that period. Sydney for longer. Sydney's been losing population to internal migration for the last 10 years. So it's a trend that's been underway. It's been accelerated by what happened last year, and it's still picking up pace. And I think it's got longevity because it's not about COVID-19 and lockdowns. It's primarily about, firstly, technology and the ability of people to work remotely, and then asking themselves the question, do we need to be in the big, congested, expensive city? And for those for whom the answer is no, we don't. There's an incentive to move somewhere that's got a better lifestyle, perhaps, a more relaxed lifestyle, and much more affordable housing. And that trend is very, very strong. And it's very evident in the sales data in the most recent quarters. That uplift in sales activity in Brisbane, we're also seeing it in regional Queensland, regional New South Wales, in Adelaide, in regional Victoria, huge uplift in sales activity. It's all evidence of that trend gathering pace in different parts of Australia. And Brisbane's a major beneficiary of that trend. Infrastructure spending, yes, it was a big driver of that boom we saw previously in Sydney and Melbourne. And the reason why it didn't happen in Brisbane, because Brisbane didn't have a massive infrastructure program happening at that time. And neither did Adelaide, neither did Perth, neither did Darwin. They didn't have the boom that Sydney and Melbourne did. The reason why infrastructure spending on big projects, when you've got tens of billions of dollars being spent on new motorways and rail links, hospitals and universities, it's not just the creation of the facilities that's influential, it's the economic activity it generates while they're being built, the jobs it creates, and that economic activity circulates through the economy, through the community, and creates demand for real estate. And then when the facilities are finished, the locations that benefit from the new transport infrastructure obviously get some uplift from that as well. So there's some immediate and there's also some long-lasting benefits from that kind of activity. And Brisbane, at last, has got a big infrastructure spend underway, and that's one of the reasons why it's now starting to rise, and why I'm confident that the Brisbane boom that's been expected for a number of years has finally arrived and will continue. The illustration on screen is the Queen's Wharf development. I was in Brisbane a couple of days ago, and that's very much under construction, $3 billion project. But there are numerous $1 billion or multi-billion dollar projects underway or recently completed in Brisbane, including the new runway, $1.1 billion, expansion of the facilities at Brisbane International Airport and Domestic Airport, Eagle Street Pier, the Cross River Rail, $5.5 billion project that's going to be hugely influential. And that kind of graphic that we see on the screen now, big projects, big numbers. If the hosting of the 2032 Olympics by Brisbane is confirmed, as it's almost certainly going to be, because it's been announced as the preferred contender by the International Olympic Committee, then we're going to see more infrastructure spend as Brisbane gets ready to host the Games. And Property Enterprise also will pick up its investment, and that's going to be very influential for Brisbane as we move forward from this point. So now we're starting to see headlines that reflect the reality for Brisbane. And in recent years, there have been predictions that haven't been fulfilled about Brisbane. We now see Brisbane's auction clearance rates, for example, rising to levels that we don't normally see in Brisbane. It's not a big auction city, and typically Brisbane clearance rates are well below 50%, but now we're seeing significantly higher clearance rates. big demand at home opens, first home buyers very active, but investors now competing, buyers from interstate looking to buy in Brisbane and Southeast Queensland, investors as well as home buyers, and we're now starting to see that impact on Brisbane prices. So just to end the presentation, if you want to find out more about Brisbane, why we rate it so highly, and which parts of Brisbane I think are the best to consider as for investment, we've just recently published the new edition of our top 5 Brisbane hotspots report, and you can get a copy of that at the hotspotting.com.au website. But we're also producing a special report on Brisbane, and it's basically titled Why Invest in Brisbane. This is more a corporate level report for people who perhaps in the development industry wanting a document that they can use as a marketing document for a major project in Brisbane. Why Invest in Brisbane, a special report that we've produced. It's a limited edition. We're only going to sell 5 copies of that report, and each of the purchasers of that special report will get their own branding and contact details on the report to use as their own report as a marketing tool or as a research document that might help them make some major decisions about whether to invest in Brisbane or how to invest in Brisbane. And finally, I'm now going to turn to answering some of your questions. Please type your questions into the Q&A panel or the chat box, and I'll deal with as many of them as I can in the time available. But if you want to follow up, and feel free to contact me in the next few days. My email address and also my office phone number on screen at the moment. I'll leave that there as I turn my attention to some of the questions that are already there. Steve is asking about the Newstead unit market. It's one of those markets that Steve has been caught up with the last few years with oversupply of inner city Brisbane. Newstead's in the same postcode as Fortitude Valley and Bowen Hills. A lot of apartments have been built the last, say, half dozen years in that market, and too many were built. But we're now getting to the point where that excess stock has been soaked up, and vacancies are now coming down to more acceptable levels. And we're now starting to see developers showing interest in building new projects in that market. So I think that we're going to see a pickup in Newstead and its neighbours in terms of the apartment market. Perhaps going to see a return to some price growth, as the general data that I had on screen a little bit earlier would indicate. Abdul's asking for some advice on which areas of Brisbane to purchase, particularly with a budget of around $400,000. With a $400,000 budget, certainly plenty of good options, Abdul, in the price range, but you are talking primarily for houses, at least in those outering areas, such as the Moreton Bay region. Now, fortunately, that is the market leader in Brisbane, as I showed with the numbers I put up on the screen a little bit earlier in the presentation. Of all the market segments in Brisbane, the Moreton Bay region, which is the outer ring suburbs in the northern fringe of Brisbane, that's the one with the most number of suburbs with rising sales activity likely to lead to price growth. So it includes suburbs like Petrie and Lawnton, which are near the new university campus that's opened recently there. That also includes the Redcliffe Peninsula, which is an up-and-coming market where we're seeing growing interest. Rail links from the centre of Brisbane were extended to that market for the first time a couple of years ago. That's been a positive influence for that market. It's also the Redcliffe Peninsula has gone through some considerable gentrification. The lifestyle elements there have been greatly improved over the last 5 to 10 years, and we're now seeing growing demand in that segment of the market, but generally in those affordable suburbs in Northern. But there are plenty of options with medium prices in the 400,000s and some in the 300,000s. Logan City, the equivalent to Moreton Bay region in the north. Logan City is the equivalent in the south. It forms the bridge between Brisbane City and the Gold Coast, and so it's well located, and it's a good option for people who perhaps can't afford to buy a little bit closer to central Brisbane or can't afford the Gold Coast. Logan City in between those two provides lots of affordable options, medium prices in many suburbs in the 300,000s, others in the 400,000s. Lots of great infrastructure. It's got rail links which link Brisbane to the Gold Coast, also the M1, and lots of huge retail offering, lots of schools. For some reason, there's lots of golf courses in Logan City as well, but the M1's going to be duplicated. It's become quite congested, and so they're building an alternative to the M1. That's one of the big infrastructure projects that's coming up for Brisbane. The early stage is called the Coomera Connector, so that's going to be an influence as well. So those are options, and also it's in the far southwest. I think it's going to perform a little bit better than the numbers are showing at the moment as we get further into 2021 and into 2022. So yeah, I think the first place to look, Abdul, would be those northern suburbs in the Moreton Bay region, which features prominently in our new edition of the Top 5 Brisbane Hotspots report. So Brian is asking why the unit market appears to have flatlined. Maybe it never got off the ground. I think the unit market has been hampered by oversupply in Brisbane for the past several years. There's no doubt about that. And even, Mug, you're referring to an investment using Salisbury. I think even though Salisbury is not part of inner city Brisbane, as such, it is impacted by the negativity that has surrounded the Brisbane unit market because of oversupply and large vacancies, and values have fallen. So units have not performed well in Brisbane in recent years. That I expect to change. We're starting to see that in the general data, that prices are starting to rise again, generally speaking. But I've been speaking in recent times, Brian, to a number of people who have held property in Logan City, Ipswich City, suburbs like Salisbury you're referring to, and haven't had any growth, and are sort of asking, shall we give up and just sell it, cut our losses and sell? I think if you're held for this long, hold on to it for a little while longer, because I think Brisbane at last is going to start to deliver some growth to people like yourself who haven't seen much in recent years, because there's such momentum in the Brisbane market now. There's so much demand coming into the market, and I think it's going to continue throughout this year, and you might start to see some price growth. Okay, just looking at some of the questions or comments that are coming in. Daniel just asking about that Brisbane special report I mentioned. It's not yet featured on the website. The best thing, if you're interested in that report, and as I mentioned, it's kind of like more a corporate level report, a limited edition report, which we'll make available only to 5 people who want to buy that copy of that report. The best way is just to make contact with me. Send me an email, Daniel Ryder at hotspotting.com.au, as you can see on the screen there. Or phone the office and we can have a chat about it. But happy to talk to you about that. James is asking some hints on the suburbs to invest in. I covered that with my response to an earlier question, I think, James, that there are good prospects in different markets. It depends on your price range. The earlier question was in a particular price range towards the bottom end of the market. I'm not sure what price range that you're in, James. There's good prospects, like the inner north of Brisbane is very good. That's the what you might call the middle ring suburbs north of the Brisbane CBD, north of the river. There's some great suburbs there, where prices tend to be in the sort of 600,000, 700,000, affordable for people out of Melbourne and Sydney in particular, showing good growth. And one of the reasons those northern suburbs are doing well is that they're proximate to good transport links, the Gateway Motorway. They're close to the Brisbane Airport, and surrounding the Brisbane Airport and the nearby Brisbane Seaport is the area called the Australian Trade Coast, which is the biggest jobs node in the Brisbane metropolitan area. So people, like to live close to where they work if they can, and so the northern, those inner and middle and suburbs in the north of Brisbane are really good places to look. But I suggest you get a copy of the Top 5 Brisbane Hotspots report, because we do outline that in Brisbane, a particular segment of the Brisbane North market, as well as Moreton Bay region, is featured prominently in that report. Okay, Katie, I'm just reading. You mentioned that Blanche has her hand raised. I'm happy to unmute people who would like to ask their question live, and we can have a bit of a chat. So let me know if that's still possible for Blanche.
All right, I'll just unmute Blanche now.
Okay.
Blanche,
hello, are you there, Blanche?
Blanche, if you unmute yourself, you can talk to Terry directly. No, it looks like she's gone.
Okay. But just generally speaking, I think you can put your hand up, but there's a button you should see in front of you, invites you to click on it if you want to raise your hand, and that alerts us to the fact you'd like to be unmuted and ask your question live and have a discussion about it. Peter's question, we've been following Woodgate Logan markets as possible. Is it possible that the prices have increased 5 to 10% last 2 months? I'm just not quite sure whether you're asking a question or making a comment there, Peter. But look, we are seeing considerable and strong demand in the Logan City suburbs for the first time in quite a while. It's been in the doldrums for 5 or 6 years, and it's disappointed people who've owned property there. People have bought there because it's affordable. The rental returns have been good, but it hasn't shown any price growth. But we're now starting to see that, and talking to people who in various ways are active in that market, including one of the major builders. I did a podcast with one of the major builders active in southeast Queensland a couple of weeks ago, and he said the demand that's coming into their projects in Logan City has been at levels they haven't seen before. They're getting a lot of buyers from interstate as well as local Queensland buyers. So I think that we're now going to start to see some significant price uplift in those markets for the first time in a while. Dean's asking my thoughts on Everton Park. I had a DA for 5 years. The figures didn't stack up. I think perhaps the figures might stack up a little bit better now. I don't have any particular views on Everton Park as such. I just know it to be one of those good, solid, sort of middle ring suburbs of Brisbane, where, particularly for buyers out of the bigger cities, very affordable by those standards. Good solid meat and potatoes real estate, and we're seeing such an uplift in demand. Someone else asked me about Everton Park earlier today, so I had a look at it, and definitely one of those markets in Brisbane where sales activity has been rising in recent quarters. So demand is picking up in Everton Park. But it might be time to do a more in-depth analysis on it, because I think the indicators are just the raw numbers simple data that demand is picking up there, as is the case across other parts of Brisbane. Jose or Josie, I'm not quite sure. Apologies about the pronunciation, but is asking my view on new suburbs like Ripley and Springfield. Do they offer good capital growth on new houses in the near term? Both Ripley and Springfield are major master plan communities. Springfield's been underway for 20 years. Ripley is more recent. They're both part of the Ipswich City local government area down in the far southwest of the Brisbane metro area. Springfield in particular has great infrastructure, particularly since rail links were extended there in the last couple of years, but has a university campus, private hospital, major shopping complex, commercial precinct, a lot of reasons for people to want to live there, and I would expect them to show pretty good capital growth. Probably the problem with those sorts of communities, master plan communities, is they've got big areas of land and they keep replicating what's there. So there's no shortage. They keep building new houses. That tends to suppress capital growth a little bit, I would suggest. Something I've observed over the years, that those sort of master plan communities with big chunks of, hundreds of hectares at their disposal to develop over 20 years or more, like Springfield has been doing. They don't have any scarcity factor, and that tends to perhaps be a bit of a suppressant on capital growth prospects. Wavell Heights is a question from Malcolm. It's a little bit hard to sort of be definitive just off the top of my head, but again, it's one of those middle ring northern suburbs, if my memory serves, that that's doing well in the current climate. I might just stop sharing my screen, and will allow me to perhaps okay. Now, bear with me, Malcolm. I just want to get an information source in front of me so I can give you a little bit of information about Wavell Heights. Just to confirm that my memory isn't faulty. Yeah. Look, it's one of those sort of middle ring suburbs in the north. I was talking generally about those middle ring northern suburbs as being a really good place for people to look in Brisbane in a certain price range, with suburbs typically with median prices in the 600,000s and 700,000s. And Wavell Heights is one of those, and it's one of those good, solid, value for money suburbs that's attracting increasing demand at the moment. Well located, good solid suburbs, and according to the CoreLogic figures, its median price has increased 8.5% in the last 12 months, including 3.5% in the most recent quarter. So definitely that's a market on the rise, and I suggest that many of its neighbouring suburbs will be doing similar things at the moment. Melissa's asking about Jimboomba Greenbank. My thoughts about those markets and the previous predicted growth in this area. Well, we're talking about the Logan City precinct down in the south of the Brisbane metropolitan area. I'm just calling up a few numbers on the screen. It hasn't been a great performer to date. And again, it's one of those perhaps newer development areas where there's lots of land available, and new housing estates are periodically being created, and that tends to suppress values, plus the general doldrums that Logan City precinct's been in recent times. But here's a significant statistic about Greenbank, because I've just called up the report on Greenbank using data from CoreLogic. In the last 12 months, its median price has grown just 2%, but in the latest quarter, it's grown 3%. Now, when I see numbers like that, I know that it hasn't performed much in the last 12 months, but recently it started to rise. Now, I'm always a bit worried about median price figures like that, but I know that this is a pattern that's being repeated in suburb after suburb across the Brisbane metropolitan area at the moment, and other parts of Australia as well, just quietly. So if you have owned property in that general area you're talking about, Jimbooma, Greenbank area, hasn't performed so much to date, I would suggest that that may be about to change, not just based on those numbers, but in the general trends in the market. How is asking, how long do you predict the price growth to last in Brisbane? Look, firstly, nationally, I mean, there's so much speculation in media asking that very question: is this boom a flash in the pan? Has it got longevity? Will it suddenly stop when JobKeeper ends in a couple of days? No, it won't. What if the Reserve Bank changes its minds and lifts interest rates? Will that stop it? No, it won't. Just look at history. Look at the late 80s. Look at the last time we had a property boom in Australia. The early part of the century, interest rates were much higher than they are now, and they were rising. The Reserve Bank was lifting them, kept lifting them, but the boom rolled on. There's so many different factors driving this boom nationally, and there's so many factors driving the uplift in Brisbane that I think it's got longevity. Some of the factors that are driving it are not here today, gone tomorrow factors. The big infrastructure spend is a huge one. It's clear that state and federal governments intend for us to have an infrastructure-led economic recovery. That economic recovery is already underway. The big infrastructure spend is already underway, but it's going to roll out over the next several years, and including in Brisbane. And so I think that substantial price growth will continue this year and into next year, at least. Okay. Amit is asking my view on Logan and Ipswich areas. I probably answered that. I hope you've been tuned in for all of the broadcast, because I've been talking quite a bit about Logan and Ipswich. You mentioned Goodna. Yes, very affordable. Let me just quickly call up some basic data on Goodna, but I know it to be, as you observed, an affordable market. It's a good location. It's got a train station linking to central Brisbane and out to the Ipswich CBD as well. It's on the motorway, so good transport links. Median house price at the moment is $290,000, so very affordable. It hasn't performed well in the last 12 months, but again, like so many locations that you call up suburb after suburb in the general Brisbane area, and you'll see that in the last quarter, there's an elevated price growth, and that's true of Goodna. It's kind of a down market suburb, but you can perhaps find properties on large blocks of land where you can do something with that land, as well as renting out the house that's on it. Frank is asking about Wavell Heights. I did speak about Wavell Heights just a moment ago, so I hope that question was answered. Mount Gravatt East. Often wonder why people ask about specific suburbs, whether they're thinking of buying there or they already own something there, because I otherwise would wonder why the focus on those particular suburbs. At Hotspotting, we tend not to focus on individual suburbs. We tend to look at local government areas. It's very rare for this suburb here to be an outperformer and the suburbs next door to be doing nothing, unless there's something very special in that suburb. But often if one suburb is influenced by certain factors, then its neighbours will also be influenced by them. So we tend to look at clusters and local government areas rather than individual suburbs. Mount Gravatt East, again, another example of what I've been talking about, that there's considerable uplift in median prices in the most recent quarter. In the case of Mount Gravatt East, Frank, median price is 680,000 according to CoreLogic. In the last 12 months, it's grown about 6%, but in the latest quarter, almost 4%. And that's just another indication that Brisbane prices have very recently started to really move upward. And Mount Gravatt East is providing an example of that. Paul's asking, will the Gold Coast enjoy spillover from the positive Brisbane outlook? Look, it's got its own reasons for growth, Paul. It's not really so much about proximity to Brisbane, other than the fact that they're both benefiting from that influx of population from other states. The Gold Coast has surprised many people. It's got considerable uplift in its market, and it wasn't expected to because it's so dramatically negatively impacted by the closure of international borders, and its tourism industry has suffered. But it's getting lots of interstate buys, and it's getting lots of expat Australians buying on the Gold Coast. So that price predictor index I mentioned, we've just completed the new autumn edition today, in fact, and the Gold Coast, the number of suburbs in the Gold Coast with rising sales activity, rising demand is quite spectacular. So I think Gold Coast is doing pretty well for its own reasons. I just caution people to be wary of those high-rise apartment suburbs. I'd much rather buy in the sort of the genuine residential markets of the inland. So places like Arundel stood out for us. Steady rise in demand over the last 6 months, prices rising as a result of that. Those are the sorts of places that I think you should focus on. Scott's saying, it's my understanding that the Gold Coast, Sunshine Coast housing markets have done better than average Brisbane suburbs. Do you have any reason to believe that will not continue? Look, it's true that the Gold Coast and the Sunshine Coast have outperformed Brisbane in, say, the last 5 years. The Sunshine Coast in particular, it's been, I think, right now, probably, if I had to choose the number one growth market in Australia, right now, it'd be the Sunshine Coast. It's just, and all the numbers, it's spectacular as a result of what's happened in its local economy with the big infrastructure spend. Again, it's that infrastructure spend that's revolutionised the economy of the Sunshine Coast and its appeal as a property market. And I think it's going to continue to be a growth market because it's a work in progress. And the Gold Coast is doing much better than anyone expected. The big change is Brisbane, though. Brisbane's now starting to catch up because it's got reasons to shine and reasons to rise. The infrastructure spend's picking up, the population data's picking up, the affordability comparison for people coming in from the big cities. Brisbane's going to be challenging, but right now, in the new edition of the Price Predict Index, we nominate the Sunshine Coast as the number one market in Australia in terms of local government areas, based on the criteria of that report. Yes, and I'm thinking primarily houses, Frank. Well, perhaps we've just clicked over. We've been going for more than an hour. Just answer perhaps a few more questions. Anthony's saying, I was advised to buy in green slopes for capital growth. And Anthony, if I was having a conversation with you, my first question will be, why green slopes in particular? I mean, there's certainly nothing wrong with green slopes. It's one of those, again, it's a fine suburb. It's sort of like middle ring, Brisbane, a classic Brisbane middle ring suburb, but in the south of the CBD. And according to the CoreLogic figures, its median house price has risen 9% in the last 12 months and 4% in the latest quarter. Another example of that syndrome I'm telling you, the big uplift in the latest quarter. Well, my question would be, why green slopes? I think when you're considering buying in a particular suburb anywhere in Australia, or somebody's telling you should buy here, the question you should ask, is this the absolute best place anywhere in Australia that I can invest right now? You know, the whole of Australia is your market. Is this place, is Greenslope the best place in Australia to buy property right now? And if you can't answer that question with an unequivocal yes, you know, I guess you need to ask some questions like why Greenslopes? And there's absolutely nothing wrong with Greenslope. Great suburb, it's doing well at the moment, but so are, you know, dozens of others. So why particularly this one? That's the question I think to ask Anthony always. Belinda's asking, would you still invest in the Sunshine Coast? Look, I'd say the best time to do so was 2 or 3 years ago. But if you buy there now, you'll find it incredibly competitive and selling very fast. But you'll still get some growth, particularly taking a long-term view. But I would suggest again, Belinda, that, you know, the whole of Australia is your oyster. Where can you find, say, an equivalent market that's got similar factors to the Sunshine Coast in the mix, but is perhaps 2 or 3 years behind it in the cycle? No, in other words, it's just starting to grow. And places that spring to mind in Queensland include Toowoomba, for example. You know, I think huge growth is coming into that market. Townsville also. And then some Queensland regional cities you might normally not consider, like Bundaberg is one that we've recently published a report on, with some growth factors strongly evident there. Ami's asking about Redbank Plains Goodna. Look, I think affordable, good location in terms of proximity to Springfield and all its infrastructure. Goodna's on the train line, the motorway, down market, affordable. There's some major jobs nodes nearby, and that's a fact. That's a reason why you might consider buying there. They haven't performed terribly much in recent years, but let me call up Redbank Plains and see whether it's also shown that that factor that I've referred to a number of times in terms of considerable uplift. Not yet for Redbank Plains. It's just a little bit has been in the doldrums for the last few years, and there's no sign of considerable uplift. Although what I will say about Redbank Plains has been 323 house sales in the last 12 months. So there's demand in that market, just hasn't translated yet into price growth of any substantial amount. I'm going to ask the question, somebody who's recently bought our top 5 Brisbane hotspots report, looking to buy a house in Ascot, New Farm, Hawthorn, Ashgrove or Clayfield, which would you prefer? Look, I get asked a lot of questions like that, and the thing is, there's not a right answer to that question. The answer to the question depends on you, the individual. It very much depends on your circumstances, why you're buying, how much you can afford to spend, what you already own, how old you are. There's a whole lot of factors. I mean, it really requires like a strategy session to determine what your objectives are and why you're considering those places. All of the places you mentioned are good suburbs. They're all at the upper end of the Brisbane market. Ashgrove's a great suburb. New Farm has done incredibly well in recent years in terms of price uplift. It's right on the doorstep of the city. Lots of good quality housing, close to lots of desirable things. It depends how much you can spend. If you can pay New Farm prices, it would be a good place to buy. But it would really require, analysis of your situation and what you're trying to achieve before you could provide a definitive answer to that. And I would point out that I do strategy sessions, which are one-on-one via Zoom usually, to discuss your circumstances and allow you to ask questions and kind of arrive at a resolution of those sorts of questions. It's really hard to answer in a forum like this without knowing more about you. And So, maybe a strategy session is the way to go. Kipper Ring has been asked by Samir. Suburbs like Kipper Ring haven't shown a lot of growth yet, but we're seeing a big uplift in demand there in recent times. Let me just call it up and see whether what's happening with prices there. As you point out, it's the where the new train line to the Redcliffe Peninsula sort of terminates. So what the CoreLogic figures are suggesting for Kipper Ring is that it's grown 5% in the last 12 months, but 2.5% in the most recent quarter. So again, that trend, we're starting to see greater uplift in prices in Kipper Ring as elsewhere in Brisbane just recently. And so we're probably going to see better performance. I mean, median house price, $445,000, very affordable. It's on the Redcliffe Peninsula. It's, as the name suggests, almost surrounded by water. It's a great lifestyle at a very affordable price, and you can jump on a train and get to the centre of Brisbane if you need to or want to. So a good place to consider in the context of Brisbane coming into a period of growth. Look, we just probably need to draw this to a close. We've been going for an hour and a quarter, and people have got things to do, and that includes me, of course, and Katie, who's sitting in the background, probably wanting to go and watch something on TV, and we can't go all night. But I'll just answer this one more question from Lauren, because it kind of speaks to a lot of the things we're talking about today, saying, is there any sign of this buyer frenzy slowing down? Do you expect it will continue when the Australian border reopens? Look, I don't think there's any sign yet of it slowing down. It's really, in many ways, only really just starting. Look, I think we have got a genuine nationwide real estate boom, the first genuine nationwide property boom for almost 20 years. It's been building. It's been building for over the last 12 months, particularly the last 6 months. It's underpinned by multiple factors. It's not just about the level of interest rates. It's not just about JobKeeper or any other factor you might care to throw in the mix. There are, on my list, 15 different factors driving this. I think it's got longevity. Perhaps the absolute frenzy that's happening right now will dissipate a little, but I think we're going to have strong demand and prices rising throughout this year and into next year. So I'll probably end it on that note. There's still a lot of questions. I apologise. We could go on for another hour answering all the questions that are there, but we just can't. We need to draw it to a close. But thanks for your participation. If you have a particular question that didn't get answered, please follow up and send me an email, ryder@hotspotting.com.au. If you'd like to get more clues about the parts of Brisbane that we rate and think are worthy of consideration to invest, please access a copy of the Top 5 Brisbane Hotspots report. And if you're interested at a more corporate level in a major report that explains why Brisbane is a place to invest, to develop, to put some serious money into, then there's that Why Invest in Brisbane special report that I referred to earlier. And please contact me, ryder@hotspotting.com.au, or on the phone number 07 519 42575. Be happy to have a chat to you about that. Thanks again, everyone, for participating. Please follow up if you have questions that didn't get answered. I'll do my best to respond to all your emails. And thank you for participating. And let's do it again soon. But on that note, Terry Ryder from Hotspotting signing off. Thanks for being with me in the special event tonight. Bye for now.